Good evening. Ira Epstein of Linn & Associates with your metal market wrap-up for this Wednesday, the 30th of June, last trading day of the quarter, last trading day of the month. Pretty important day overall, a lot of volume, a lot of activity. We're about 5:30 p.m. Now, fair warning to everybody. Over the next 2 days, we're going to have a litany of brand new data, and it's all jobs related and how the economy is doing in PMIs. Give you an example. Challenger Group planned job cuts, jobless claims tomorrow morning. Market Group PMI and manufacturing comes out. Then the ISM manufacturing, construction spending, and then natural gas injection. Leading all of this up to Friday morning when we get that all-important jobs number. And you know, here's what you got to be careful Friday. Traders will see that, and some of them just take off after the report. You're going to go into that holiday mode as some of the markets don't open on Sunday night. Others do for the July 4th holiday. But just about everything closes by noon on Monday. Remember that. I want to thank all of you that did attend our live What's Up webinar today. We had a ball. We had a lot of people in it, a lot of great questions, covered a lot of things. Make sure you make room for it on your schedule. There'll be one this coming Wednesday, a week from today. It opens at 12:15. You have to get the invite, and I make it to where you're either on our mailing list or I'll put it up here and you hit something there just before it. But be ready for that because it's going to be Wednesday and I'll start putting out the invites on Monday, even though it's a holiday. Okay, so let's go to the charts in gold. The gold market is fighting a battle here, a serious battle. If you settle weak, and you're down right now for the week 0.39%, but if we get much lower, you've got a problem. The Friday close, and this is going to be all important to me, to get friendly, you have to get back over 1789.80. Haven't done that yet. In this chart, as you can see, you had the drop down, you've got the narrowness and inside trading date that happened today on Wednesday, and you're staying within that as we reopened. You still have the pattern of lower highs, lower lows. The market, even if it rallies, I'm looking for stiff resistance at the 100-day average at 1793.30, but that would get you over that 1789.70 level on the other chart, and that'd be good. So that's something to look at. And support further down at 1712.30 on the Bollinger Band. When we step over to the slow stochastics, until that red line closes over 20, I'm in the bear camp. Now, caveat, big caveat. If that jobs number is out of sync by a lot, anything can happen to gold. People may jump to it for security. People may dump it because they like what's going on. And of course, you're dealing with a certain element of people buying gold recently thinking COVID-19, that Delta variant, because you saw gold did rally today as even the dollar was up, and the dollar was up as even interest rates were falling. You put that together, it's probably a certain amount of that COVID variant buying that's coming into the market. The gold-silver ratio is pulled back to that number, and I've been telling you, you're either side of this right now, not setting up much of a trend in the differential between gold and silver. In the SEP silver, you've got a pattern of now a higher high, a lower low. And where's the battle? You do see it. It's the 200-day average of closes. The momentum in the market, if you look, you're not embedded tonight because one of the numbers is over 20, but under 20 for the close on Wednesday, under 20 on the close on Tuesday, and under 20 Monday. So you're embedded and you're instantly losing it. Be careful. When I see that, I just walk away from markets. You'll say, well, how do you know it'll keep the embedded loss? Not only don't I know, I'm not convinced I want to go through much with the report and a holiday going in to Friday. I just haven't made my mind up right now. I'd rather enjoy myself and not be going crazy over the weekend. Why did I have to have a position? And you'll say, well, it's lost opportunity. Lost opportunity for a loss or a gain is what I don't know. higher high, lower low in copper. You do see how this market is paying attention to the 100-day average of closes, and it'll probably be constrained for a bit here against that 18-day average. No trend, downside bias. Platinum, higher high, lower low, just drifting right here. The strength's in the palladium market. And it turned bullish again, as you can see, and up a whopping $97 today. That's a 4% gain, almost 3.5%. Power that came into the market. Now, I've been looking for a move as the automakers are saying they're opening more plants because the chip shortage in many areas has lightened up. And I know, example, Volkswagen in Mexico reopened. I mean, there's many of these stories that I'm reading, and that's going to cause demand for this because it's catalytic converters. So it's one of the things that I'm looking at of many things. In the dollar index, this was a lost play. When you were up here and you lost the embedded reading, you normally make a run for the closest moving average. And when it did this, I should have been smarter and saying, that's close enough for me back here. I don't know. Looking back, it normally hits it. Playing for that little difference, I wish that I had said that to people. But you today got back over that high. You could re-embed by the end of the week. I want no part of that up here. What's it going to do off the jobs data? It's not acting weak, I will say that. Ethereum, right back where? To the 18-day average of closes. That's where the battleground is. Wasn't this the weekend where I know the articles I'm reading that Bitcoin's going under 30,000, it's going to 20. Well, my next report, you'll see that's not what it did, and it carried this market a lot higher. You can't get caught up in those headlines. I think these people write it so that people keep reading their byline, not that they actually know what they're talking about. And, chart action is chart action. That's where the money is. The money's speaking, not the writer of all that. One of the things that I love to do is teach and train and give ideas. Now, the purpose of this is I can't possibly talk to all of you personally, but in the mornings, in my paid, and I want to use that word, this is not a freebie, my paid video, I'm giving you what I think you should do, not what I think the pros are doing. I want you to buy here. I want you to sell there. This is where I want you to put your money. Am I going to be wrong? I am going to be wrong. Am I going to be right? I am going to be right. I'm like anyone else. But I think you'll find my 50 years of being a chartist, a pretty serious chartist, might be of value to you in the sense, I want to see what Ira thinks as I'm thinking of putting on this trade. What's he saying about this? And I cover it in a certain way. You know and I know that these markets, as we're looking at them, the stock indices, the interest rates, the metals, you want to trade GLD, it's based on the gold. You want to trade DIA, QQQ, it's based on those indices. I could go on and on. Energies, USO, which one do you want me to talk about? Service industries. Then we cover this right here in the ETFs because they are all going to be covering it in the same way. So I'm helping you with that so you can see. Now, I put out one at 5:40 in the morning, and then I put the Spider ETF one out at 8:40. I begin recording. When I do it at 5:40 in the morning, you see how I started this video off with the news? Well, I'm going to show that. You're going to have the reports as they've come out. The reaction, I'll tell you to what the reports are. This is all as you're starting your day. And then you've got this with the buy here, sell there, or just what I just said. I tell a lot of times, I don't think you should be in the market. Why are you taking on that risk? The name of the game in trading is surviving to the next trade. You're going to be wrong. You don't have to stand in front of a bullet train where you're going to dodge it right at the last minute. You're not going to succeed. All you got to be done is one big loss, you wipe out your account, or you lose an appetite for trading. It's the wrong thing. You need discipline. Discipline is what I come to the table with. So give it a try. How do you do it? You go to our website. Under the word research, take a look. It's all there. You sign up for it if you want it there. And it's self-explained. I even got a short video on it. My staff, if you want to call them, they'll work with you on it as well. I'm Ira Epstein. You have a great day, and I will talk to you all tomorrow.